Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. On Friday, happy Aloha Friday as we say on the islands. Third day of July 2015, and this is Trending Markets. Quiet day, half a day. More importantly, these currencies are really awaiting what happens on Sunday in Greece as they vote for the referendum to accept or not accept current austerity measures necessary to implement, of course, if they expect to get any bailout money. Euro right now did close nominally higher, up about 29 points. 111.15 is the print that we've got in terms of settlement. And just as the euro closed nominally higher on the day, we had the US dollar that we have been recommending you enter from the long side. That moved down just a little bit, down about 16 points, 95.95, so just below 96. We still believe that we should see the dollar return to the upside momentum that has been really the overall characteristics long-term in this market. Of course, short-term in this market, really since about 2015 when it hit 100, the dollar hit 100. On the dollar index itself, we have seen that correction take place, taking it to roughly 93 before finding support and now moving up to roughly the 96 area in terms of this basket of currencies that we weigh in the dollar index itself. So we are recommending that we maintain current long positions in the dollar, short positions in the euro. The only other market that we're really looking at in terms of initially putting some type of position on is crude oil. And as you know, crude oil has really exhibited a very, very interesting tendency. First, we saw this dramatic drop in which the market was trading at 110. From that point, it drops all the way down to almost 40 in terms of our current Elliott wave count. Our sense is that we have just completed this long wave down, this being our third wave, and we are within our sub count here. We are probably going into a corrective wave within the sub count. And so what I mean by that is this wave here, this particular wave 4 is a up wave. This up wave will probably have a 3 count or a 5 count. And within that, we are in the second component, and I am looking for some weakness here. But according to our system, we could see this market inevitably move as high as about 70 before drifting lower and completing that final fifth wave. We'll take a look at oil again next week. We'll maintain our currency positions. And lastly, the other markets that we've been looking at, of course, have been the equities markets. And my sense on the equities markets are really, when we look at them, on each occasion that we have seen this market move to these most recent highs, I'm using the Dow Jones Industrial right now as our example, but we have had a definitive level of resistance here just above 18,000, 18,200. These are our record tops, and each time we've gone to these tops, we have gone down. So I have been a little bit reluctant in initiating any kind of position in this market, but here's my sentiment. I'm absolutely a buyer if we see solid closes above the record tops. In other words, if we see this former resistance become support and we're going to move to new high ground. However, if we continue to run into this brick wall every time we come up near these highs, we have very short-term short plays. And at some point, of course, it's many analysts' belief, and historically speaking, every 7 years, we've seen some sort of a correction in the market. We always want to be on the lookout for that, but at the same time, what we can say is that as this market is steamrolled and barreled up to these new highs, the characteristics of the corrections have been shallow at best. This is Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another Trending Markets. Bye-bye.